Hello and welcome to Explain the Charts. Today, April 13th, 2025, we are analyzing AUDUSD, looking at the news and the charts. Recent Google searches show concerns about AUDUSD weakness, partly driven by U.S. tariff reversals and global economic uncertainties. However, some analysts suggest that easing U.S. inflation and potential RBA rate cuts could provide support for the Aussie dollar, potentially leading to a bullish reversal. We will examine whether the charts back this up. Let's start with the daily chart. The daily chart shows a downtrend in the recent periods, although it seems like there has been some consolidation in the recent days. We can also see some significant dips downwards, followed by periods of recovery. Looking back to late 2024, we see support around the 0.62 level, which may come into play again. The most recent daily candle indicates potential indecision in the market. This could be a sign of a potential reversal or a continuation of the downtrend. Remember, the AUD is correlated to the Shanghai Stock Exchange, so we must monitor that as well. Now, let's zoom into the 1-hour chart for a closer look. The hourly chart shows more granular price action. Here, we can see more clearly the struggle between buyers and sellers, especially in the last few days. We can observe a tight trading range forming, indicating indecision. Specifically, let's narrow down on a range of hourly candles from April 10th, midnight to April 11th, midnight. We observe a choppy pattern, further solidifying our interpretation of consolidation. If the price breaks above 0.63, we could see a move towards 0.64. If the price breaks down below 0.62, we would have to expect prices to fall even further. Finally, let's turn to the 15-minute chart to examine the very short term. The 15-minute chart helps identify potential entry and exit points. The last few candles indicate a slight bullish push. However, the overall picture is still mixed, and the price can reverse direction very suddenly. If we see sustained movement above 0.63, we can be certain of an uptrend in the short term. In summary, we see the following. Significant support can be found at 0.62, with resistance around 0.63. A break above 0.635 is a strong bullish sign, but is unlikely, while a break below 0.61 is a strong bearish sign and is also unlikely. Given the current consolidation and mixed signals, I would predict continued consolidation with a 60% likelihood. A 25% chance for an upward swing to 0.64 and a 15% chance of a downward swing to 0.61. Keep an eye on upcoming economic news releases from both Australia and the US, as these could act as catalysts for a breakout in either direction. That is all for today. Thank you for tuning in to Explain the Charts. Please like and subscribe.